Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that equity markets are thinking better news is around the corner, but bond markets are decidedly sceptical. Wall Street equities are up today by 0.8% so far, as US positions on trade at the G7 summit in France seem to have softened considerably. First, that had a positive impact on European equities, but they were a bit more cautious, up 0.4%, ignoring the Asian signals yesterday when Shanghai fell 1.2% and Hong Kong and Tokyo each dropped about 2% each. Also improving the mood were US durable goods orders data for July, which improved from June and were up 3.1% from the same month a year ago. However, a closely watched subset of this data for capital goods showed no growth year on year and a small slip from June. The US National Activity Index, tracked by the Chicago Fed, turned sharply negative in July. This resumed its negative trend that was briefly interrupted in June. Going the other way, the Dallas Fed Regional Survey of Manufacturing turned more positive in August, boosted by more production than new orders, although it too shows a worrying retrenchment in capital investment. But so far, bond markets are not buying this idea that it's some sort of turnaround. All the US Treasury curves are now negative and getting more so. One of the agreements reached in France was that the new French 3% digital tax will stay, but the mostly US companies levied it will be able to deduct that tax from the impending OECD plan for taxing digital services under their BEPS framework. One of the G7 claims came from the US administration that China very badly wants to make a trade deal. However, China has made no such public statements so far. In fact, their only public statement didn't sound positive at all. Meanwhile, growth rates around the world keep on slipping. The OECD says the annualised rate for their group of 36 developed countries is down to 1.6%. The New Zealand growth rate was 2.7% in the year to March, and we'll get the June data on September the 19th. US Treasury 10-year yield is unchanged at 1.53%. Gold is still high at $1,529 an ounce, up $2 since this time yesterday. US oil prices are lower again and now just under $53.50 a barrel. The Brent benchmark is also down to $58.50 a barrel. And the Kiwi dollar is marginally softer, now at 63.9 US cents. On the cross rates, we're down sharply at 94.3 Aussie cents. Against the euro, we're firmer at 57.6 euro cents. But the overall impact of all these various movements leaves the trade-weighted index unchanged at 69.2. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.